I want to start with the idea of lightening up a little bit of some of the tech holdings and whether this is basically your view on the idea that leadership in the equity market might normalize a little bit more away from just the big tech leaders to the broader market in general.
Well, it's difficult to say. As you know, we are an index near fund, and so the large tech companies will automatically be some of the largest positions we have. I think it's interesting now that the 7 biggest companies we have combined is like 12% of the fund. So it's a type of concentration risk that we have never seen before. And of course, that's a bit worrisome.
Nicolai, I just wonder how you think about this moment more broadly. We're waiting for CPI in the US, but in the rest of the developed world, rates have started to come back in. The conversation has changed to fear of recession. For you, is this the start of a paradigm shift for this economy and these markets?
I'm not so sure that that's the case. We think that inflation generally will be pretty slow to come down. We're seeing some inflationary pressures, actually from the climate. We're seeing some food elements within the CPI, such as olive oil, orange juice, all these kind of things. These prices are continuing to rise, and we think that will be part of the effects which keep inflation higher for a bit longer.
Well, as inflation is higher, to your point, Nicolai, the big tech just keeps getting more and more concentrated. I know you've trimmed back on some of your holdings, but do you worry about the unhealthiness of an overall market that keeps contending with central banks doing the same thing, about not a shift? Is it a market that you worry has gotten over-leveraged and you could see more events like a volatility akin to last week?
Well, I think if you talk about leverage, I think the thing that worry us here is the debt levels we are seeing in many countries. The budget deficits, which continue to be there, continue to build. The debt levels are very high. And I think that's really the biggest worry we have. You see what can happen if you get these kind of trust moments, which we saw in the UK, where suddenly people lose faith. And that's probably the biggest risk we are facing today.
What I find fascinating, Nicolai, is when we talk to you, you really emphasize the fact that you're hinged to the index. You own the world, essentially, and you are sort of susceptible to the different trends that come into play. One thing that you've been very vocal about is that you're trying to use your position as the biggest sovereign wealth fund in the world to influence change. And I'm wondering, with respect to concentration, as an example, we're seeing the Department of Justice in the U.S. go after some of the big tech funds to try to increase competition. Do you think that's a good thing? Are you arguing within board seats saying, you should make efforts to try to open up the competitive field?
Well, we as big owners, we are not advocating to split up large tech companies. Of course, we think that things like AI should be regulated, and we really need to have responsible use of AI. But we are not really interfering in the debate about whether these tech companies whether one should go after them or not. I think they generally do. They are fantastic companies. They are well run, and they are important investments for us.
It kind of goes to the heart of this issue that comes up so much, Nicolai, which is how do you balance having a sort of social overview for your fund where you're trying to invest in renewable energies, you're trying to argue for changes at the tops of companies, while maximizing returns that might not cohere with some of those trends so perfectly. I'm thinking of, say, fossil fuels or the renewable energy infrastructure that didn't perform as you had hoped.
Well, a couple of things there. First of all, we think you have more influence as an owner as you have compared to if you just sell out your holdings, right? We have continuous dialogues with these companies. During the first half, we had more than 2,000 conversations with our companies. And so being an owner is the best thing you can do in terms of impacting change. The second thing is that we think being a responsible company and delivering good returns is going hand in hand. If you're not a responsible company, you will not have people working for you, you will not have clients, you won't get insurance, you won't get bank loans. So it really goes hand in hand, and you need to think long-term as a responsible company to generate the returns.
Nicolai, how are you thinking about the U.S. election and the impact either Trump 2.0 or Harris administration will have on investors?
Yeah. You know what? You'd be surprised by how little we think about the U.S. election, because we are invested in the U.S. companies, and both parties are, in our mind, pro-business. And so we don't think that's going to have a huge impact on our portfolio.
You think both Trump 2.0 and Kamala Harris are pro-business? You think both Democrats and Republicans are pro-business?
We think generally speaking that the large US companies which we are invested in will continue to do well, whoever wins the election.
We know you're a big holder of Tesla and you voted against Elon Musk's pay package. What do you make of corporate America, some CEOs like Elon Musk, really tying themselves to one camp? Clearly, he's in the Trump camp with his most recent conversation with the former president this week.
Well, I think it's interesting, and I think it's a new phenomena, and of course, it is risky for companies to tie themselves too closely to one camp.
Nicolai, can you just expand on that a little bit? Because obviously when you look at companies, there are different metrics you have to look at. And some of the metrics include governance. Does that kind of fall into the governance camp? Do you need to take a second look at companies that are maybe getting too political?
No, I don't think we need to do that. We would not want to sell out of a company if it's close to one political party or the other one. So I don't think that's necessarily relevant for that decision. But of course, you have to think about risk to people's businesses if their client base is associated them with one party or the other.
Nicolai, you talked earlier not just about some of the governance of corporations, but also the fact that we have this deficit that is surging and that concerns you dramatically, that is actually your top concern going forward. And I think about your very philosophical podcasts where you start to really do some soul searching with other big investors and chess stars of the world. And I wonder how much you're sort of forced to do that yourself when you look at a picture that looks like it's just a train wreck, but there's very little that an investor can do about it.
Yeah, it is very little, because this has been a development which has been going on for a very long time. Investors have been warning about it for a long time, and when these kind of things, like big budget deficits, it's okay until it isn't, and you don't know what's going to be the trigger. But if you have like a trust moment, which refers to the situation we had in the UK, then when it comes, it's going to be it could be pretty dramatic, and it happens very quickly.
But for yourself, how do you hedge against that? Do you become a bond vigilante, or do you not have that luxury?
No, you can't. I don't think as a long-term investor you can hedge against that kind of thing. I think that would be speculation, and you would need to make a judgment on when exactly that happens. And I don't think we don't have that insights or any view on exactly when it could happen.